Right guys, delta flip trades, that's what we're going to be looking at today. We're also going to look at, well, when should you use these types of trades? I'll show you an example that we traded on the recent 6-week course of how to go about taking the trade on, what you want to see from a footprint to execute this trade and how you expect it to play out. But crucially with any type of trade, first up, you need to know where you're taking the trade and why you're taking the trade. So what we're going to look at then is this trade down here. It's a buy. But why? The reason that we're trying to buy it is previous VPOC. It's also a previous VPOC. Now we're not going to get into the profile too much, but highest volume traded areas. This is where the market on the previous day drove up and away from. So you expect to find buyers again down here. So as the market comes down, you've got your level. The level that you're interested in is 64. So what we're going to go and have a look at then is from an order flow perspective, how could you perhaps get a better entry? How do you recognize that the move is now about to start as well? So this then gives you the opportunity to then leverage this position up. So what we're going to look at then is as the market comes down towards 60, 63 area and how you're then going to go and trade that. So what we're looking at here then is we've got a position at the moment. This is just a simple passive entry. Identified the level, place a bid on the level. Now what you can see from footprint, what we're interested in then is where's this turn coming from. Now we're right down on the level that we're interested in. The level is that 64 zone. So as I say, one passive entry. You don't want to be building the size here. We haven't got enough information. This is what a price standard does for you. You know you fancy buying it down here, but you want to see that other people do. Once you see that, then you can get involved. Now what you're seeing from the footprint is for the first time an increase in delta. That predominantly is from this very large buy that comes in here at 63. So we've got that, and that's showing that there is definitely a willingness from some people to buy here. But what we want to see is a little bit more aggression. It's all well and good for people to want to buy down here, but that's what we want to do, right? If everyone just sits there and wants to buy, the market doesn't bounce. What you need to see is people now willing to pay higher prices, i.e. try and buy 65. So they trade through that. The market just trades through and then we trade up. The last traded quantity here is the last amount that's just traded. So that's showing you that willingness to pay at the next price. What we've got then is now a situation where we bought 63, we bought 64, we bought 65. The delta has flattened off a little bit, but we did get momentarily that push up. So what we saw from a ladder there was that people were willing to buy through the offers at 64, buy through the offers at 65. Now this is a situation, I think it's good to sort of look at trades like this. I remember being asked about this. So on the 6-week course, so some of the people went, well, how do we know we're right here? And where's your stop? To which the answer is you don't know you're right. But what you're doing is you're basing this on the current information that you can see. We've seen delta turnover and you see the delta is now once again growing back up. We've seen a willingness to buy at 63, at 64, at 65. So with all of that information, yes, you may not be right, but we've got the technical reason from the chart. You've got enough from the footprint to say this looks good, so you can get into the trade. For a stop on this, you've got two choices. You can either place your stop just below the low, 59, or there was a previous level down at 54 and you could place your stop down there. I'm not going to get into the idea behind scaling all the way down and back up. It is a viable trade in this situation, but not within the realms of what we're discussing here, and partly the market doesn't get down there anyway. So this is quite a slow and steady trade. Now, I know that often we sort of show these very fast trades, and there's one that I looked at previously on the S&P where we looked at a much quicker breakout type trade. But these steady reversal trades, you have to be able to sit through. And once you've got that information that says, yes, it's all stacking up in your favor, you're looking good. You should be on this trade, holding on to this trade at this point in time. This is quite a subtle use of footprint. If you want to see a more detailed and quicker use of footprint, then come and join us on one of our webinars. Click on the link below and we'll be able to explain a little bit more on that as well. But at this point in time, this is where, and for anybody who's getting new to trading reversal trades, one of the things you always have to remember on a reversal is the market has got to work out that this is the low to start with. So you've got to stop people selling, and then people have got to decide, buyers this is, that they're not going to get filled if they wait down here. And so it's the new buyers that come in once it seems reasonably clear that the market is no longer going down, that the market is going to rotate back up. And these things take time. I'm actually now going to show this at quadruple speed to be able to show you the progression up. Now, this is to sort of get around the fact that, well, this does take its time. But what we're looking out for, particularly, delta has flipped up here. And in particular, if you look at it from a delta histogram or volume histogram to start with, big change in volume here. You see in the delta on a cumulative for the day, very, very quickly rising. So all of this stats together to say, yeah, you're probably right. And the fact that it's on a level that you want to buy anyway is perfect for you. So that sets you up for the move. It is now a case of identifying areas to target. First of those being 69. So the way that we're doing that is based on the low volume above. So you've got this low volume from 69 to 74. So that's going to be your first area. You can cover something, reduce a little bit of risk, take a bit of profit, however you want to term that there. And then you're playing up towards 76 and 79. This is where, particularly 76, where the market then was able, and this is what you're looking for from a footprint, was able to trade down on relatively light volume at price. So this is a much more aggressive movement down. That's the area then where if we are going to see any pushback, it's likely to come from 76. So that's the way that you want to be trying to approach this. Now that you've got the position that you want, it is a case of now you sit back, the plan is in place. And that's so key for anyone taking any new trade on. The plan is in place. Let the market do it now. Even if it feels slow, even if it's not doing much, but this is good. You've now got this imbalance. This is now a scramble. So what I mean by that is all the people that sold it down here, the people who sat on the offer, who got pushed through by the buyers down at the lows, they've just got pushed out. And it's that scramble up, this rush of buying, which gives you that quicker move. Perfect for getting out of a trade. It gives you that quick flush up and you think, yep, I can now start to be confident, one, that this is going to work, and two, you can then start to cover into that move as well. So it's got everything that you want, and then it is just purely a case of letting this move go. In terms of a stop, and the reason for the stop there is not, and I will really point this out, it is not to do with the fact that this is a one tick winner. It's to do with the fact of, look down here at 66. Above 66 is where the market then was able to drive on. That's why the stop's down there. You're not putting the stop there just because it's a one tick winner. Coincidentally, it is a one tick winner, and that's what you're interested in. Something I stress so much on any kind of course that I do. 6 week course, 1 week course, you don't go for a one tick winner because you're on side. It was a coincidence. That's why you're getting out there. That's your delta flip trade. That was one covered on the 6 week course. If you want to know more about that course, click on the link, come join one of our webinars. I will see you all with another one of these very, very soon. Take care, guys.